Welcome back to another Sunday night show, also known as Drinking in the Dark with Frugal Tiger. Pretty exciting episode for you guys this week. A very action-packed week in the market, despite the overall market staying more or less flat. A lot of news, a lot of interesting stuff happening. Let's get into it. The overall market more or less is still range bound, which is pretty interesting despite the massive volume of stimulus being announced. Anyway, let's go into some individual names that I was really watching last week. As I mentioned this previous week, I had sold most of my bank holdings. I had a couple of banks left, and I assumed without blowout news, these banks would not continue their run higher. Friday, they did sell off a little bit, but honestly, they didn't sell off all that hard, and the tape action was muted, which makes me think there might be some more room to run in banks. Having said that though, just from a straight pandemic perspective, I'm not so sure that even banks can withstand a prolonged period of economic contraction, or if a second wave happens. I don't know how good this is for banks. I still have some exposure because, like I said, the market in general has been moving way harder and way stronger than anyone could have ever imagined. But overall, I've really reduced my position in banking, and I'm gonna probably keep it that way. Outside of that, we still have mRNA. mRNA had a huge move last week. It was 110. It was very close to getting removed off of my immediate watch list because I felt like the action was starting to get muted. It is back on my watch list, and I am trading this name. It moved from 110 to like 127, 128 in a pretty steep move. So for those people who primarily don't trade stocks or don't trade individual names, but trade like S&P and indexes, you can make an entire year's worth of gain, 20% gain, just by trading individual names like mRNA. And that's a great example of a stock that just has a lot of action and relentless action. And the price action was super strong going up. Mara was another name with some back and forth as Bitcoin seems to have hit resistance around 40,000. It hit 40,000 twice, broke above 40,000 a couple of times, but seems to get sold off now as it gets close to the 40,000 level. I think Mara is going to, as it has exposure primarily in cryptocurrency, is going to have some trouble without a continuous flow in Bitcoin. Same with the ETF I mentioned last week, GBTC. Obviously, if it tracks Bitcoin and Bitcoin is not doing very well, it's not going to do very well either. But for those people who want to play Bitcoin, that's another great name, GBTC. But the big move and the huge move that I want to talk about was Tilray. Tilray actually had a huge move in the tape. I pretty much knew it was gonna move. Based on Monday's action, I had bought only 1,000 shares. I know, I'm a wuss. Frugal Tiger. Keep in mind, he's recovering from getting his hand caught in the goddamn cookie jar, all right? I got slapped last year, all right? I got, tossed around last year. So I'm still playing it a little coy. I honestly should have bought 3, 4, 5,000. I have tons of money just sitting around doing nothing, especially since I liquidated bank stocks. But yeah, Tilray. Tilray is the name. It is having a massive, massive move, and Frugal Tiger is only having a small piece of it. Having said that, the name itself has doubled last week. So Tilray, huge move. Pay attention to this one. I think the trend is still higher from here unless they announce fraud or Democrats hate weed out of nowhere. You guys, this fucking sucks, all right? GameStop, I was boasting to my friends how, despite how terrible of a year 2020 was, I got a 300% return on GameStop. I bought GameStop shares at $4 a share. You know what fucking piece of shit price I sold it for? About $12 a share. I was ecstatic about that, especially coming off the year that I had. But the short squeeze on GameStop continues, and GameStop hit $36. I don't know how. The only way you can explain that is a short squeeze. It was above $36 and it was just marching higher last Thursday. talk about a tape. Michael Burry called it last year with GameStop. Michael Burry is this like super genius, autistic Asperger's guy who can just read financial statements, know where it's at. He's shorting Tesla right now, and he's been short since like 680, 660. So he's getting his face torn off on that trade. But his GameStop trade it took a long time for it to pay off, but boy, did it freaking pay off. A huge return on GameStop. I don't think I'm gonna be trading GameStop, however, from here. I don't think I'm gonna be shorting it. I almost debated shorting GameStop at like 16 or 17. Thank God Thank God I didn't do that. Oh my God. I probably, Frugal Tiger wouldn't have a Sunday video. Frugal Tiger Sunday video would be Frugal Tiger with a GoFundMe account. Oh my God, that move in GameStop. Oh, Taiwan Semiconductor, huge move on Taiwan Semiconductor. It was a day after I thought the move would take place. I managed to do a couple of day trades on Taiwan Semiconductor. They worked out for me pretty well. I don't think I'm gonna be playing so much of that. The big news in Taiwan Semiconductor actually is the fact that Intel might be using them to manufacture their chips and things like that going forward, which benefits both parties because Intel's chips lately have honestly been very shitty compared to AMD's. So I don't think Intel can save itself against AMD by moving manufacturing and trying to cut costs. They're trying to play the business side of things right now on the Intel's trying to play the business side of things right now. But truth be told, they need a better product at this point in time. Intel actually did have a huge move last Thursday. I believe last Wednesday or Thursday. I don't remember the exact date. It was up like 7 or 8%. I got some text messages from people, should I buy Intel? Should I buy Intel? You know what I told them? I told them, no, do not buy Intel. It's up 8%. And in fact, I would probably short the name right now. But you don't short stocks in a bull market. Wait till the buying pressure is off. Intel, I'm not a buyer of Intel. Their product is garbage and will probably be garbage until they release a new cycle. They have some new chips coming out, but I have friends in the tech industry who are speccing out these chips and they think they suck. So keep that in mind. Right now, they can still coast on the fact that a lot of data centers and a lot of people have written software that require the Intel architecture versus the AMD architecture. And it takes time to weed off of that. And so they still have money coming in from that, but stay away from Intel for the time being. I very rarely have a firm opinion on something, but rather than buying Intel, I would rather even buy AMD at $88, even though I sold it at $36. Motherfuck. AMD actually sold off a little bit after the CES show that I was discussing last week. It didn't seem to have a the strong buying pressure AMD has been having for a long time. I'm not picking up any additional shares right now. I kind of want the market itself. The S&P has been in a trading range, in my opinion. It hit 38.24 and then it really sold off pretty hard after that, back down to 37.60 on Friday. And I kind of wanted to pick a side before I start buying some more stocks in great quantity. Other names I want to talk about is Bingo. Well, it's not Bingo, but BNGO. Can we call it Bingo? BINGO? We'll just call it Bingo, okay? So with Bingo, is having a huge move, and they're actually pulling the Tesla card. They're a biotech company. Biotech companies are incredibly volatile. They can move either direction, but it's having a sustained run. And what do I mean by they're playing the Tesla card? Their stock price has been rising and it has risen, and the company has taken advantage of it by issuing more shares at their higher stock price, giving their balance sheet a nice cushion of $100 million, which will essentially allow them not to run out of money, fund operations for the upcoming 3 to 4 years. So the company itself might not go bankrupt the way most biotech companies go bankrupt very fast. So let's pay attention to Bingo. It's at $8. It had a huge move Friday. We'll see. I'm not very convinced yet. Let's watch the price action and see if it has a similar response as Tilray has. Keep in mind, this stock has already flipped multiple times already, probably, 6, 7x already. So we'll see if it can continue the run. I want to talk about Airbnb and Dash. I kind of haven't really looked at it too much since IPO time. And Airbnb and DoorDash are two tickers that I have really been paying attention to this past week. I'm not buying, I'm not really trading them so much, but their actual tape is in an upward trend. A pretty strong one up until Friday. Friday, they dropped 6% on Airbnb and I think 9% or 10% on DoorDash. Essentially, those two companies have been in a massive upward trend. We're gonna see if this trend continues. Personally, my call is no, they will not continue. They're heavily overvalued. You can't really short the names right now. Insiders are able to sell the stock on these companies pretty soon. And once they start selling, I'm sure there's a lot of insiders that wanna dump some of their shares off on the public as soon as they get the chance because they've made fortunes. Let's wait for that to subside. I think that'll cause a huge downward pressure on the stock. Might set us up for a buying opportunity, although I really don't see one because the valuations are insane. I don't really see the tape going higher. Finally, we had a little bit of a down day for both of those names. If you do want to trade Airbnb and Dash, if you look at the charts, their patterns are essentially the same. So pick whatever industry you enjoy more. If you like Airbnb's business model of renting out your house or being able to live in someone else's rented house, then go ahead, go for that. If you like DoorDash's food delivery service at a 3x markup where, a $10 or $15 pizza costs you $45 to get delivered, at least where I live, then go for that. But these overvalued business models, the whole thing just reminds me of Netscape during the dot-com bubble. $3 billion valuation, made no money, and we see where Netscape is at now. If you're gonna trade Airbnb and Dash, if you're gonna buy these stocks, I recommend you looking at Snowflake's chart. Snowflake IPO'd a few months before Airbnb and DoorDash. And Snowflake ran up from like $280 to $420, and then it sold off really strongly. So I really do see Airbnb and DoorDash kind of following suit. Public might start dumping, or other people or funds might start dumping with the expectation that once insiders are able to sell, the price is going to fall. So that's what I'm expecting, but I'm wrong all the time, you guys. That's all I really have to say about that. I will say one thing about Snowflake though, and especially since it's drinking in the dark with Frugal Tiger. I was looking to buy Snowflake during the IPO. I really was. Because at the time, based on the news that I had, the IPO price was gonna be $80 a share. I checked with all my brokers if they can allow me an allotment before the company goes public. All my brokers said, no, you used to be a man who had money, but you lost so much money in 2020 that you're a piece of shit. So they refused to give me an allotment. And honestly, by the time it IPO'd, I was like, if it's still $80 a share, I'll buy it at $80 a share. We'll see where it's at. Then the price just kept going higher and higher before it even reached the public market. It opened at it just opened so high that I think I just burst into tears the moment I saw Snowflake hit the tape. I just burst into tears. And it's not like me to just burst into tears like that, but I just burst into tears. I was like, I could have had it at $80 a share, but no one would give me a chance. It's a shame, you guys. It's a shame. You have one bad year and everyone thinks you're nobody after that. But it's okay, because I'm making a comeback. Let's go into preparation for this upcoming week. Earnings. So we have Bank of America, Goldman Sachs, and Netflix on Tuesday. I probably am not going to be trading my Bank of America. Bank of America is one of the few banks I have my max allotment still. I sold most of my shares in most banks, including Bank of America, but it's the one that I have the heaviest exposure to. Goldman Sachs, I have no exposure to. I'm probably not trading that. I don't think without blowout numbers, these banks are gonna go too much higher. That's just my opinion. Netflix, if we look at the charts, let me just see if I can pull it up right now. Give me 1 second. Netflix had a little bit of a correction. Looks like David Einhorn, for the first time in years, is finally starting to make just a little bit of his money back. You know, this guy was a billionaire like a year or 2 years ago, but after bad trades on Tesla and Netflix, his investors just ran for cover, you know? If you guys thought Frugal Tiger was having a bad year, David Einhorn's having an even worse year, man. Whew. Netflix had a 10% drop already. I'm a little concerned about their content just in general because it's getting difficult to crank out content. People aren't producing in the middle of the pandemic. And also they have a lot of competition with Disney streaming, but I'm gonna be very interested to see if their 10% drop. So they were at 540 in December. They're at like 497 right now. I'm interested to see if the shares get bought back after earnings or if the downtrend continues. My general guess, and I don't want to guess too hard, is it might take a little bit of a breather. If it's bad news and it sells off, I think I'm gonna actually short it on Tuesday, because I think the ride down will be pretty dramatic. And by shorting it, I just mean on an intraday basis. If it gaps down, I'll take a short position and try to ride it down a little bit. We'll see. I think the good news is more or less priced in to the stock. I can't imagine how many more subscribers they've added. I actually wasn't gonna talk about Disney earlier, but Disney, my God, is this stock having a move or what? I think I did a YouTube video about how I sold all my Disney stock. God damn it, man. This is like, oh my God. Oh my God. It's at like $171 a share. It's okay. The one thing I want to mention, even if you miss out on opportunities, there's always money to be made elsewhere. Okay, 1 or 2 bad plays are not going to get you taken out of the game if you can allocate your money again elsewhere. But whew, was I wrong about Disney? Jeez, it's at $171. I think that's Netflix's biggest problem. Disney and Roku is the stock to be buying. This stock is another stock that I bought at like $40 a share, sold it at like 90, bought it again at like 70, sold it at like 130, and it's at $408 now. I don't know how, but this is a stock that is on an uptrend if you guys want to ride the wave. I went on a huge tangent. I wasn't even supposed to talk about Roku, but look at this freaking chart, man. Pull up a chart if you guys are at home. Okay, I'm sorry. I got off track. So back to earnings. So we have Bank of America, Goldman Sachs, Netflix. I'm probably only going to be playing Netflix on Tuesday. Wednesday, we have UnitedHealth and UAL. These are both good names to trade for earnings. So watch UNH, watch UAL. Airlines in general are great earnings stocks to play. Last week, Delta Airlines was pretty good. I mentioned that last week. UnitedHealth is a great one to play as well. Thursday, we have Intel. If there is bad news, I'm going to short this stock that day. That same day. It's not going to be a permanent short position. And the reason I say that is we are still technically in a bull market, and you have to be an idiot. You have to be the biggest idiot on this You have to be Frugal Tiger to be shorting stocks right now. I'm gonna be shorting this name. CSX is another great earnings trade. IBM is announcing earnings on Thursday, but sometimes it's not a fun earnings play. There's obviously other names, but I'm assuming a lot of people that watch this don't watch stocks 24/7. So I'm going over the names that, in my opinion, will make the best trades. And then on Friday, we have SLB. There's another one I'm watching right now, a penny stock called CHEK, CHEK. It's had a move up and it's actually stable at its current price at $1.70. It's a pretty high risk trade, but it might be worth paying attention to. I think it's a double or go to zero kind of stock though, just so you guys know. Those are all the names I am watching this week. It's very important that you guys understand the market did sell off on Friday, but it was a very strong and robust hold. The market sold off, I think, 56, 60 points, and it got aggressively bought back, as we've seen in every time the market's dipped. It's a very powerful market right now in terms of its ability to hold off and stave off major losses. Every dip is getting bought, and that's the public's mentality. Buy every dip right now, which really sucks because I don't understand these valuations, but you just got to play the game too. So that's something that I'm really paying attention to. Also, I forgot to mention a few other names. DraftKings, having a huge bullish run. I love that stock. I love that name. I love the gamble. I love DraftKings. So watch out for DraftKings. Space had a huge move Thursday. It got sold off on Friday. I've been mentioning Space probably every Sunday for the last few videos. I just want to reiterate my love for Space. Palantir got downgraded from $26 a share down to $10 a share, but it's having an upward tick in price. And honestly, these analysts don't know shit. I actually took all my entire long-term trade in Palantir off last Friday. It had a huge move up. I made a 2.5x return on Palantir. So I'm actually really happy with that trade. And for how often trades have been going bad for me, I just got to take the money and run when they go good. And I'm going to convert that more into a full-time trading name, Palantir. Space is still a name worth watching. My God, is it a great trade? I've been mentioning these same names over and over again, but I just thought I'd throw them out again. One last name. I'm really sorry. Talking in tangents here. Amwell. Amwell had a huge move from $25 a share to $30 a share. I actually cut my entire position on Amwell on Friday, and here's the reason why. I think it can continue to go higher, but every time it's hit 32, it is sold off, and it's sold back down pretty fast and pretty hard. My mentality is Amwell could still be range bound. We'll see how it responds to 32. I am risking, of course, missing the move from $31 to $33, $34 a share, whatever. I'm missing 10%. But at the same time, I want to see it break out with some force before I have money into it. I've been doing this trade for some time, buying it at 26, selling chunks of it at 30, and then rebuying pieces that I sold lower, but it doesn't seem to have that speculative demand on Wall Street, and I will wait for that to come in before I reallocate, even if I miss the move from 31 to 34. I'm okay with that. Anyway, I'm rambling too much in this video. There's one more thing I want to talk about, and that is the market sold off on Friday. $1.9 trillion stimulus plan announced by Biden. And I think it sold off because that's essentially what the market was expecting. It wasn't any new news that the market really took into effect. Also, there were questions and concerns about it getting passed, how likely, things like that. Having said that, the market just basically rebought more than half of its losses. Anyway, I hope you all get a chance to really enjoy your life. Thank you all for tuning in for the Sunday show. Grab yourself a White Claw, and I'll see you next week. I just want the money, 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 money.